Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, good holiday. There's a lot to be good about. I'm Ira Epstein of Linn & Associates with your metals market update for the weekend now of actually the 14th of April 2017. It's Good Friday. Obviously the markets aren't going to be open on Friday, Easter Sunday. The markets will reopen then. But we're at an interesting juncture in the gold market. The 1291 level is a very important number, especially when we're going to look back at a continuation chart of monthly charts. And I bring them back all the way to the all-time high in gold for you, to the 1920 level, and I'll show you what that did and where you're at after the correction into the 1046 prices. You're gradually coming off those lows. Dollar index right now still down for the week, and if you'll take, when we get to the dollar index, you'll see that it's under some selling pressure. A bit of a bid coming into the euro, the British pound, the yen, and of course we did see Donald Trump, our president, come out and say that he still thinks the dollar is too high, and then flip-flopping now saying he's considering Janet Yellen as one person that might be heading up the Fed. He hasn't made up his mind yet. We saw a huge bomb today dropped in Afghanistan, 21,000 pounds, I guess it is, 11 tons. And the costs are insane, but these are meant to go after the tunnels that we find the ISIS fighters in, and we'll see how that all came out. And of course, what an interesting time to drop that, just as North Korea is getting ready for another nuclear test. Keep also in the back of your mind that we have the first round of the French elections coming up. And as much as people might say, Miss Le Pen, yeah, she'll make it through the first round, never get to that second. I think we heard that on Brexit. I think we heard that on the Trump election. You want me to go on and on? Because there's many more things we can bring up. So far, the polls haven't been all that accurate, and let's see how people feel as we get into that period of time. Now, here's your monthly chart, and what I've decided to do is go all the way back for you. So this chart keeps going back, but what I'm concerned with is the all-time high of 1920.70 made in 2011, and then the correction down to 1046.20. Now, this, I think, is a valid point line. In other words, it's got plenty of points that it's hitting here on the chart. Let's say that that comes in right in this general area of the where prices are actually. They're right now 1286.30. Remember, this isn't the June contract. This will be the nearest one that's trading. But that 1291 level is going to be very important on this chart. And that's what I'm trying to say. And the market responded. We know it's a valid point because you came from there down here, and I can connect all these points, and you're back up into the resistance. I would like to see it close over this number, and that could do the job for the market. You have to get over 91 to get to 1300. From 1300, you got a ways to go before you're up to 1375. But once you do that, this pattern is no longer valid, and I think traders would be stuck with this line right here as being the bull line, and maybe another one that comes up in a short-term momentum line for the longer term trader. For the weekly chart, you've gone from 1194.50 to the high this week of 1287.60. On a closing chart, you can see the last price here is 1286.30, and you can see how the market is done there. It's come up about 100 and, in round figures, $60, not bad at all. So the market has had a nice run to the upside. The swing line has now got, with this action this week, higher, low, higher high, lower low, which tells me in the next break we should not be going through this break low of 1194.50 if the market's going to start acting bullish. When I look at longer term moving averages, the weekly, we have a bullish crossover. Let me bring you to it right now. This was the close of business last week, and if you'll notice, both the 18-week and the 100 were at the same price. When the market reopened this week, as I had told people as we were doing this, the math would make that get an explosion upward, and it did. Now, would follow through the rest of the week was going to be the question, and it did. And look at how you've made that higher high. So until you violate this area, and that ties in with my thought that you're not going to take out 1194.50 if you're going to keep an uptrend going. I don't know how deep of a correction to expect when one does set in, but this market's looking good. And it's also saying, gee, the upper Bollinger Band currently 1296. With the math the way it is, we'll probably see that number up around the 1300 level or slightly higher come Sunday night when the markets reopen and you begin the new week. Do remember, you're not open tomorrow, Friday, Good Friday. In the U.S. markets, that doesn't mean abroad they're not open. Will they get a lot of volume? I don't know. Momentum's still pointing to the upside, so everything there still in the way of a bullish bias, not trending as a bull market because you don't have the pattern of higher highs, higher lows, but you certainly have momentum galore to the upside. The gold ETF is doing the same thing. I'm looking at 123.55 as a big number there. Momentum certainly locked into the upside, and we've had a bullish crossover here where the 18-week is over the 100-week. So, and market is making the higher high, so that is bullish. Where you definitely have on the chart action a bull full-fledged is the miners. Why? Higher lows, higher highs, calling for a challenge here of that 2610 level, momentum pointing up. This chart's looking still very much in the bull camp. The silver chart, as bad as you want to look at the daily chart and say, the market's fighting, we know it's been fighting a battle at or slightly higher than the 200-day moving average. Now you have an outside week, I take it back, I said that wrong, outside week up. You got higher lows, higher highs, and outside week. So until this week's low of 1773.50 is taken out, I'm going to call that a swing line low, and that should be a number that the bulls try to defend. If the price can continue moving higher, 1896.10 is one of the numbers that might look at. In the copper market, copper is just strange right now. It's got a pattern of a higher high, and then it comes down right now this week, made a low under that low. So you've got strange movements. You're really not trending. You have downside bias, and what I'm going to call an overall flat Bollinger Band, as you can see, top and bottom. Next support, if the market continues down, and momentum says it is, around the 248 level, 247.95. In the platinum market, battleground is the 18-week moving average of closes. You've hit it almost every week for 5-6 weeks now. So we can see where that's at. The resistance is the 100-week moving average. You have the trend down because the swing line's got lower highs and lower lows, which is countered by the close over the 18-week average. I'd call this a pretty neutral chart. In the palladium market, you have the opposite. You got a breakdown on the chart, so that's getting a bit ugly. Momentum is trying to wane and pull back a little bit, so it's giving up some of the bullishness. And notice where the dollar fought its battle, back up at the 18-week moving average of closes. You're having at this point an outside week down. In order to get friendly this market, you got to take out this week's high of 101.26.5 to negate that, but it doesn't mean you'd get bullish from there because the pattern can't turn bullish. You still got the lower low and the higher high, no matter how this works out right now. Take out this week's low and then come back up. That can change the whole pattern of the chart in favor of the dollar. So right now, if the dollar continues down, 99.15. If the dollar continues down, probably offers gold another bid. Gold has the North Korean situation staring it in the face. Gold has the French election staring it in the face. And gold has a problem right now. Well, a benefit is not the right word, problem. It has a benefit of U.S. interest rates continuing to sink down, not going up, as traders have moved back into safe havens to a large degree. Now, I want to talk to you about something that I'm doing. I'm going to take off the discount on my charting course next week, and I am going to raise the price of it. The course right now includes 54 videos. It comes with pages that allows you to see numbers. Number one, that you'll plot for window envelopes. Number two, you get buy and sell recommendations in detail. You get a morning video. You grab a cup of coffee, and how often you hear me say this if you've been watching, and I go through 40 charts with you, but I'm teaching you Bollinger Bands, swing lines, everything else, and reviewing what you're learning in the course. The course, the meat of the course, is 54 video chapters, each maybe 8 minutes long on average. They start off with a recording of a PowerPoint where I teach you, say it's swing lines or Bollinger Bands, the concept, how it works, some of the formulas, and from there I walk you through and then take you into real charts. Now often what I do is I'll cover the price and name on a chart. I want you to see real action as it's unfolding. I teach you how to win, how to lose, both. That's very important. Nobody wins every trade. So the question is, knowing your risk, identifying it before the trade is put on, do you want to take that? Winners, where to let them run, where to start coming out of them. Bollinger Bands, very important. But there's so much more than you see that what I do here in these videos. It's really in-depth, 54 chapters worth. We give you free charting software. That's $100 if you were to get it month to month. Then you're going to get 30 days access to my research because it's so important. It ties in with what you're learning at that time. The morning videos, that by itself is $160 value, those two. Then the course itself, all those videos. $89.95 is the whole price, but if you type in Ira 15, you'll get a discount of $15. You're $74.95. And remember, I'm about to take off the discount and raise the price. So use this holiday weekend to do it. You'll be surprised when you come back Monday or Tuesday that your coupons may not work. I'm Ira Epstein. You have a great holiday, and I'll see you all come Monday.